Call the meeting to order of the Newtown Township Finance Committee, Wednesday, February 21st, 2024. Call the meeting to order. I will do the roll call. Scott Crowder. Here. Alex Kukas. Here. Larry Fisher. Here. Ed Nappols. Here. Lisa Pascal. I see Lisa not here. We need to stand for a moment of silence and pledge of allegiance. Pledge allegiance to the flag of the United States of America, to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. We need action to consider the agenda for this meeting. Moved by Alex Kukas, seconded by Ed Nappols. All in favor?
Aye.
Aye. Opposed? None. Public comment for the agenda items only. I see no public in the room. Minutes. Consider approving the minutes from the January 17th, 2024 meeting. Moved by Alex Kukas, seconded by Ed Nappols. Are there any suggested changes to the minutes in that? All in favor of accepting the minutes as posted? Aye. Opposed? I hear no opposed. Good. We have no, Lisa Pascal came in. We won't ding her. We'll just give her something to do.
Okay. She volunteered.
That's right.
What are my new assignments?
You'll find out. It's just a surprise. I just are always good. Okay, we're gonna do item number 7, reports, treasurer's report, and the financials.
So in your packet, you did have an update of kind of where we were with our cash. I hope you've had a chance to kind of take a look at that. We continue to remain in a positive position on that. I will tell you the board has given us direction. They've kind of given us 10 priorities on capital projects as well that are non-stormwater related and 5 directed to stormwater. And so I suspect that what we see is the balance in the capital reserve fund will be spent down significantly over the next year, particularly in the area of the ARPA funds, as well as, like I said, the capital reserve. So we're moving forward with those. A couple of those projects that we're looking at are close to $1 million a piece. So that's what I'm talking about, kind of significant. I could see spending about $3 million out of the capital fund over the next year, and all of the ARPA dollars during 2024. So just wanted to kind of let you know that.
Is there a tracking schedule on this in terms of dollars projected, spent, that type of thing that would be, like, say, on the website, available to the public? Can we do something like that, where folks can see what's going on?
So there was when we presented the capital budget, there was a complete list of all the capital and exactly what we would spend for each one of those items. And then when we...
So it's really buried in the budget document as compared to a standalone.
I mean, it is a standalone document that I can share with somebody, but it's separate as a document that we've been looking at with the budget. It was not just lost in the whole budget piece. It was a separate document that the board reviewed and looked at.
All right, I'll double back on that, because I have some thoughts about one of the items later in the agenda.
Okay. So I wanted to talk about that. The other thing that I wanted to share with you, we've wrapped up the 2022 audit with the auditors. They've sent us the municipal authority audit, which is good. We've got that done. They are doing the final part on the township audit. We are scheduled for the 2023 audit. Timeframe looks like probably late July, early August kind of completion on the 2023 so that we can get everything back on track. So the good news, bad news, I guess on the audit is when we originally kind of anticipated some numbers on the audit, there was some thought that we were going to end the year with about $1.5 million over for 2022. It looks like we were by the time-
2022?
for 2022. We looked like we're really kind of closer to about 500,000 by the time we got done covering all the liabilities and things like that we had, which is what I expected in once we really had a chance to get into all of it. That's why you can't just look at cash. You have to look at the whole picture. The good news is it was still a positive year, even though we had a really, really bad year when it came to the pensions and the things like that in 2022. And we also had the OPEB benefits were a little bit of a challenge. And so, but anyway, you'll get a full report hopefully at your next meeting with the audit from 2022. We'll go through that, give you answer any questions you have. As soon as I get it, that it's a formal document that's been accepted by the board, I'll get it back out to you all so that you can see it and do that. The other thing that I wanted to report back to you on.
You staying with the audit for a second? I'm
Yep.
sorry, I'm just thinking about something. With our covenants on our bonds that are issued.
Yes.
Is there any trigger mechanism regarding timing of audits, those types of things? Like if it's taking a year to do the 2022 audit, are we at any type of a risk there?
Well, we've disclosed that we had a change in staff and we had to get caught back up, and they've accepted that because our history has been different. And so I think we're okay with all of that. We have disclosed it. We had to disclose it. We let them know, we gave them a preliminary just so they knew that where we were. It wasn't like we're trying to hide anything. It's, it's just where we were.
Really, we're a good risk. Our financials are good. I'm just thinking sometimes they just have those trigger.
They did have a trigger.
provisions.
We had the answer to the trigger,
Yeah.
and we've done that.
Okay.
And we've given them, we've been sending them things as it's come in. And so they've been accepting of that so far.
Got it.
I wanted to talk briefly, I think it was probably about last year, this time, maybe a little bit later or earlier. I was sharing with you, we had a horrible year with our pensions in regards to what the market had done. It had gone down significantly in 2022. The good news, 2023, we actually bounced back. The bad news is when you lose 16% from a number, if you have a 16% upswing, you're still not back to where you were,
The base
right?
is lower.
Your base is lower. I'm glad you all understand that. And so, because that's a big thing. When people see that, they think they bounce back to where they were, and they really haven't. But we lost about a little over 16%. In 2022, we actually had about a 16.5% increase in both the non-uniform and the uniform pension plans. What I'm really excited about, though, is that number reports back that we're back at 95% funded for the police pension and 98% funded in the non-uniform. And when we look across the state and we look at local pension plans, that is incredible. The township has, the board has continued to take and make that a priority in making sure that the pension plan is funded, and continued the market value funding versus smoothing when they could have smoothed. And by doing so, yes,
Can
there
you
was
explain that, Steve?
Yeah, so when there's a downturn in your pension and it starts to be underfunded, they say, well, you can take a look and you can say that you're going to regain that over a period of time. And they'll take it out 5 to 10 years and they'll smooth out that loss and say, based on expected returns, here's where we think you need to be in contributions to handle that over that period. And if the market goes back up, that's fine. But as it goes back up, you only gain a small amount each time because they're looking at it over that 10-year period with some expectation of drop off. We made a decision probably, and I say the board, the township made a decision probably about 6 or 7 years ago to go to a market funding strategy, and saying that the market funding, as a market funding strategy, we would be looking at funding the pension plan no matter what the market did to match what we needed, to match whatever the market was doing, so that we weren't looking over necessarily what we expected in 10 years from now, but what was actually happening in the day. The other thing that the board moved and did, kind of with the guidance from our folks who manage our plan as well as the pension committee, was that they said, let's really look at dropping the assumption rate, because the assumption rate when I first came was like at 8 something percent for the non-uniform and like 7.5% for the uniform pension. Rate of return. And everything that the investors are telling me is that if based on, you can get a better return than what we're getting, that 6.25% is basically what we're aiming for if we take higher risk, right? We wanted to take this, and we're 70% funded in equities and 30% in bonds. So we're not no risk. We obviously have risk, but we looked at our risk level and we said, where do we need to be and what kind of expected return? And they were telling me long-term, they were projecting about 6.25%, 6.5% returns over a 10-year period at the investment strategy that we were using. So we started looking at that and saying, why would our pension plans have an assumption of 2% greater than what they were actually, the investment folks were going to say we were going to get? And so we made the decision to drop the assumed interest rate on our plans. In doing so, that's also required more funding. And we've done that. And the board is, been consistent in that over the last several years. And in doing so when we say we're 95 and 98% funded, one, that's not taking smoothing into account. We're actually market value, which is solid. Two, our risk assumption is pretty close to what we think we're going to get out of the market on a long-term basis. And so it really is a healthy plan, and one of the healthiest plans in a state. The investor for our plan, not the person who kind of manages the account, but the actual investor came in and met with our bond board, or our pension board, I'm sorry, this last meeting. And as she and I were talking, as she left, she said, I do hundreds of pension plans. And she said, this is by far the best municipal pension plan that we manage. And so I want to say that because I think it's important that you all hear that, and what that means for us is twofold. One is, it is one of the things that when we go out for bonds, that the bonding agency looks at is, where's your pension plan? And so they look at that. And so when you can show that that's strong, and it's not strong because we're making it look good because we're doing something that's not what's realistic. I mean, a lot of pension plans are sitting at 8, 9% expected returns, and they're not getting them. And so even though they keep projecting that, it's like,
surprised they still allow.
Well, it's funny because there's more and more pressure to change that and not allow that. But
Yeah, that's like casino. Yeah.
Eight was
I mean,
standard for a long time.
Huh?
Eight was like the mark for a long time.
Yes,
Yeah.
8 was the mark for a very long time.
Even when interest rates were like at 0.5%?
Yeah, because,
Yeah.
because they expected the stock market returns to be so
Oh.
much better. And when you're expecting the stock market, I mean, look,
That's
I
why
think-
they're underfunded.
exactly. Yeah, exactly. It's what drives that. And then if you really go to where they need to be, makes them even worse, you know, because one of the things that I said was when we wanted to change from 8 to 6 or 6.5, I think we went to 6, but anyway, 8 to 6, I said, I want to do it when we're healthy. Like, I don't want to just do it and put us into distress, because the last thing I want is for the state to say that your plan needs our attention, right? Because I don't know if you know anything about the state pension plans, but I don't want them controlling our pension plan, okay? That's just a personal
They do
thing.
such a great job.
Yeah, they do such a great job, right? And so, you know, and because that was the talk for a long time, was the state was going to take over all of these municipal pension plans. And I kept
The issues
saying,
they have with Chester and all that.
yeah, and I get it if your pension plan is, you know, underwater, but I don't want to be dumped in with all those underwater pension plans, and then we're having to fund for all of those underwater pension plans, because we've done the right things all along. And so we've worked really hard to make sure that there's no reason for the state to ever look at our plan and say they need to take control of our
That's
plan.
probably also good when you're trying to attract.
Absolutely. I tell our employees all the time, you need to be thankful that we have a board that's so committed to making sure that that stays healthy, because, you know, there's going to come a time that we all want to retire, and we're hoping that the money's there. And what we know is the money will be there, you know, as long as this continues. And so, so anyway, I've spent a lot more on
No,
that.
that's
than-
good.
No, one of the past meetings, you talked about possibly trying to get the board to smooth out your annual payment rather than recalculating it, you know, every 2 years, so you don't get these.
Yeah, and so we still need to work on that.
Yeah.
What Larry's talking about is that because of the market's fluctuation, that changes necessarily what we have to do. And we had this $200,000 extra that we had to put into the pension plan this year because the market was down. Because they only do an actuarial evaluation every 2 years, and it's always for that moment in time.
Yeah.
If you remember, January of 2022 was like, was it 2022? Maybe it's January 2023, I'm sorry. January 2023, the pension or the stock market had a terrible fourth quarter of 2022.
Right.
So January 1 of 2023, we go in for evaluation, and all of a sudden our pension plans that had been 100% funded were now, you know, like low 90s and even into, I think, like 88% funded for the non-uniform. And so, you know, that hit was huge, you know, and but it was a moment in time. And so what I've been trying to look at is, should we get to the spot where we think, based off of, like, let's take what the market's supposed to do over a period of time, fund accordingly, even when it's up, and we don't have to fund as much, continue to fund. And so that instead of having that $200,000 swing, to get that so that it stays level, and that we would just go ahead and keep funding. And on the years when we're kind of down because we've overfunded, we're not going to have to fund. And on the years where we're when we wouldn't have to fund as much, we're over. So it would hopefully be a little bit more balanced. We're watching that, trying to see it's. I want to get to there, but I'm just not quite sure what that right number is yet. And we've been talking with the pension folks, what that would look like. And it's going to take a little bit to kind of really figure that out. But once we get through this period, I think it may make more sense.
What the markets, what does that mean?
Well, I mean, the whole idea is that we say that we're going to be at a 6% return. That's what we're anticipating the market to do. We don't know that it will do that, right? You know, any one given time, the market could be up and do better, the market could be
Of
down.
course, but the S&P 500, like for the last 40 years, 11% on average. So
Yeah.
if we have our investments simply in the market,
Yes,
then your comment makes sense. I assume that we probably have advisors who are telling us to put money here and put money there so that we consistently underperform. Unless we're doing better than 11% per year.
well, but you gotta remember, so if if I had taken our entire pension plan and put it, huh?
No, you can't.
No, I'm just saying.
Preempt that.
Yeah, I know you can't, but if I had taken the entire pension plan and put it all in the S&P 500,
40 years.
and we would have done exactly what the S&P 500 did.
11%.
Right. And so your risk then flows with the pension, with the S&P 500 as it goes up and down.
Correct.
What they've determined is they've said, putting it all in one doesn't really make sense. And so you buy some bonds, we are all in what basically are Vanguard traded funds. We don't buy stocks individually. Like, we don't go out and say, in our pension plan, we haven't decided to buy Apple and, the specific
You
stock.
have an index fund. You
We
probably-
buy an index fund.
You're in the index fund for stocks, hopefully not in any other funds other than one index fund. And then you're in some bonds.
We are in multiple index funds because we're investing in large cap, small cap, just through the process. It's a standard type of an investment.
And we probably,
Diversification.
and we haven't made 11% per year the last 40 years.
No, like this last year, we were at 16 plus. The 2 years before, we were at 16 minus. So,
We're leaving money on the table. It seems, in the interest of risk.
Well, you have to, because
No, you
with
don't.
2008, all of a sudden it's down 40%. And then you gotta come up with this incredible funding. So you're doing well, I know, but you're not in a point in time.
yeah, the problem is you have to fund it based
And if
on where it
if
is
you're
in that point in
retired at the
time.
point when all of a sudden it's down 40%, then you
Well, you
lose
can
money
diversify
dramatically.
through the bonds and other
Well, that's
stuff,
what I
but it
mean.
seems if you have large cap, small stock, mid cap, put it in one index fund for the tabs, like pick an index and go and run with it. S&P index, and then do the bonds, and probably you have some else with real estate.
Actually, we're literally mostly stock equity holdings and bond
Do
holdings.
you know off the top of your head how many different funds are? You have to look it up.
Well, I off the top of my head, I couldn't tell you.
Maybe it would be nice to have them come in and
Well,
go over it.
I can do that.
Yes,
I can do that.
because a lot of times they have some good strategies embedded and.
We use CBiz INR. They're a passive management company in that they only use index funds versus like buying active stocks and doing that, which a lot of the pension plans do. We are in 1, 2, 3, 4. Four or five, it looks like. Oh, we're in 3 different bonds and we're in 5 different equities. And I'm happy to share that if you want to take a look. We have tended.
It's different than a personal. I guess the requirement that you have to have your pension funded at a certain level negates the ability to just run with the market, right?
Well, I guess you could if you want to take that risk and be ready to fund, like, when.
Oh, I get it. I
Yeah.
get it, but we're consciously making the decision, we're not gonna match the market's returns on the up years. We're also not gonna lose as much as the market
On the
on
down.
years.
That is
And
exactly
we're
what,
comfortable with that, even though.
Yeah.
On a personal level, we would all do something very different.
Yeah.
If you were 70
Right.
versus 50, your perspective would be a little.
Oh, okay. Well,
Maybe. Yeah, and I was gonna say, a lot of it has to depend on what your level of risk, you know?
Right.
I mean, I know people that are very conservative all the way through those years, and I'm like, you know, you're not gonna get the returns you need for long term if you're very conservative in your early years. I do get it when you hit 70, people make that change. And part of it depends on where their dollars are, you know? But I hear what you're saying.
The big thing is there's a whole lot of difference when you're accumulating it than when you're taking it out.
Yeah,
When you're starting to take out that money, if the market drops, you're compounding your loss in a way that'll destroy your retirement. Can't get it back.
and what we have is, because we have people that have retired, we always have people taking
You
out.
always
And
got-
in some cases, we have people taking out more than we're putting in, because we have more people retired at the moment who we're taking out. And so we're always having to watch that.
Right. Absolutely.
All right. Any other questions regarding I just wanted to give you that update because, you know, usually I come in with like, I knew the last time I was here with the pension plan, it was like, oh, we're kind of way down and, you know, but I wanted everybody to hear that we were back up. Anyway, I've talked more than I intended to on that section, so it's back to you.
That was great, Steve. Okay, Steve, anything else on the financials? Are we done with that?
Unless you have a comment or a question, that's all I was going to talk about.
Great, okay. Move to old business. We had talked about the idea of moving this meeting from monthly to something other than monthly.
Yeah, so let me tell you where we are. I did have the board adjust the resolution. So the resolution stated that you would meet monthly. And so at the meeting on Monday, a week ago, the board actually passed the resolution that allows you to meet as often as needed, but at least quarterly. So you're required to meet 4 times a year, but if you want to meet more often because you want to discuss something, you can meet monthly and do that, or as often as you feel necessary. So that's where we are now with your monthly meetings, or your meetings, not monthly. They don't need to be monthly anymore, but you do need to meet quarterly.
Which opens the question as to whether or not do we want to consider moving off of monthly. What I should do is motion that the board would consider adjusting the meeting schedule for monthly. Give me a second. Give me a second.
Can we do that?
I need a
Does that
second.
have to be on the agenda as a motion?
Well, I think because it's a little different than, you're not making a decision to spend money, you're not making it. I mean, like, I think because it's on there, you know, to discuss the future meeting schedule, people would assume that was what was part of the discussion might be.
Back to, I need a second. Okay, Larry, okay. Now we can have discussion as to, do we in fact want to move to something other than monthly? It's wide open. I know it was talked about back in the end of last year. Or do we want to leave it where we would decide at the current meeting whether or not we need, timing wise, do we think we need to meet the following month or to defer for a month?
I like that idea.
Yeah, I like that.
I think that's a,
Okay, so everybody's got to be, you know, like, okay, what did we decide last month? Are we meeting or are we not meeting? So again, is without it being set, like if it's bi-monthly and it's set, it'll be kind of. So
Well,
that's
here-
the only danger of doing it.
Yeah, so
back
here's
on.
what my thoughts are for you. I'll throw some ideas out, and obviously you as a committee need to decide. You could say that we're going to continue on the monthly schedule like you have for the rest of the year, because that's what's advertised. And that if you decide at this meeting that you don't need to meet next month, then you can decide for that purpose, or you can leave it up to the discretion of the chair. If there's not anything on the agenda that would require a meeting, the chair could say that, and we could just cancel the meeting, since we've already advertised. If you want to actually officially change your schedule, I would need to re-advertise. And so there's there's an additional cost there. That I think we would have to take as an actual vote at a monthly meeting, because there would be a cost to advertise. But if you kind of keep it that you're going to decide, either you or the chair, as a board, get to the end of this meeting, you say, we don't have anything we can see there, but, we don't know what would come up in the next month that we might need to meet. We could do that, or we could just say, yep, we're going to go to every other month. Or you could say, we're just going to meet quarterly, and if we need to meet more often, we'll advertise specifically for that.
I'm fine with leaving it up to you.
So
The
we
chair,
would leave the
Yeah.
schedule
I mean,
and then
if you don't
just
see
put out a
anything
note that
coming
the
down.
meeting's been canceled.
Cancel.
Oh, yeah.
And we've done that with a
Yeah.
couple other committees, just because the committee, we got down and we looked at it, and on the agenda, the only thing was approving the minutes from the last meeting. And we're like, why are we coming together to approve the minutes?
Get out of bed.
And yeah, for you guys, just get out of bed, but.
Well, some of
Well, because for most of our meetings are at night. And so that's why when you say that, I'm like, that hopefully people are out of bed by then. This is my only 8 o'clock in the morning meeting. That's a committee meeting.
All right, so we're gonna leave it that, the chair or the vice chair, depending.
Yeah.
Will make a decision at the end of the current meeting.
Not necessarily, you could make it the week before, like,
Got it.
and
Okay,
we would
so
send that
what I'll
out.
Do is Jamie, first does the interaction with the agenda and my communication person. When she, sends out the request to adjust the agenda for the upcoming meeting, I'll make a call at that point. I may even contact each one of you individually rather than a chain mail. Do you have anything hot, or do you want to defer?
Yep.
So I can kind of put it out that way.
And I'll let you know if something comes up that I
Yeah,
think that you really
yeah.
need to be in
Right,
the
through
meeting.
Jamie. If you
Yeah.
do it through Jamie, that way I
Yeah.
can coordinate with her, so
Yeah.
rather than me.
I think that helps you through this year, since we've already advertised.
Right.
And that keeps us from having to re-advertise. And then we can and we'll see what we're doing, and then you can make a good plan and say, we need to meet every other month, or, really once a quarter
Well, I'm
works.
thinking, once we come out with the year-end 2023 financials, we'll want to have a meeting at that point to see what the final.
And that's why I think you'll probably want to meet next month.
Right,
I think we'll have a full audit to give you from 2022. We should be pretty close to having a kind of a wrap up of the year-end financials. Because I know we're kind of working towards that now. And so we could kind of give you an estimate what we think
so the thought would be we're going to meet in March, and then we'll TBD on what happens after that. point.
Yep.
Okay. Any other
Well,
comment?
we have this motion on the table. Do we have to table it now, or?
Well, I think it sounds like you could table it, or you could just withdraw your motion, and
I'll
that'd be
withdraw the
fine.
motion.
And if the second's okay with that, then
Yes.
you could be fine.
I threw an item on here, new business, after Steve and I discussed at the last meeting. And I think what just happened at this meeting, where we had some really good interaction on pension, interaction on capital. Thought process being that first of all, I think, well, we're not making a motion yet. Let me talk for a minute, and then we can talk about whether or not we need a motion. What I'm thinking about is the fact that most folks eyes will glaze over if you put a large financial document in front of them. So rather than doing things like, well, here's the budget, posting the budget in the Township Newsletter, and everybody's saying, oh my God, those are garbage, that you would pick out particular topics, and you would do what I'll call the 20-second snapshot. You could use a graph, you could use a little bit of text, maybe bullet points, and highlight topics that the township residents would presumably be somewhat interested in, and they'd be willing to spend 20 seconds scanning it. Things like capital, things like pension, things like what's been the trend over the years in relationship to the township residents, the number of residents, and the township budget. So there's a lot of trend information that I think would help enlighten folks if they choose to take the 20 seconds to scan the half or quarter page in the newsletter of particular topics. So that was my thought process in terms of this topic on the agenda, and whether or not the members of this committee would, number one, be willing to participate in that, and then we can get into dividing up and choosing topics that could be bi-monthly or quarterly, whatever the newsletter is, that will not turn into a large project. Because again, you got a 20-second attention span. You got to fit it in 20 seconds, so you're wasting your time. So that was my.
Paper one.
Well,
With the electronic. one.
So the electronic newsletter that's going out now, that hopefully everybody received a notice about when they got their bill for their taxes. We actually did a flyer inside of that, if anybody paid attention to that bill. We actually did a flyer inside of that, encouraging people to sign up. We've also put it in the written, the monthly mailing that went out for the last 2 quarters, stating that we were doing that. We're evaluating whether I need to do a postcard to let people know about it. And so we have a postcard kind of ready to go to the printers. We're just trying to decide do we need to make that investment based on how many people sign up for the electronic newsletter. The electronic newsletter will be done. It will be printed out. And if somebody wants to come in and pick up a hard copy, because we've got some folks who don't have access to internet or that, there'll be hard copies made available at the library and upstairs that people can just come in and pick up. But for those who have access to the internet, we're hoping that they would just do the electronic.
We're getting rid of the monthly.
Which actually was quarterly.
Quarterly.
Yeah, we are getting rid of the quarterly.
So we're gonna get rid of the print.
Yes.
Other than a print copy will be upstairs for folks to have to physically come in, but actually mailing.
We're not mailing one to
is
the
gonna
houses
stop.
anymore. That's correct.
Okay.
That's a
Well,
I was at a dinner party this weekend. 2 things came up related to this. One was, I had asked if anyone had read, because we had just gotten one in the
Yeah.
thing. No one looked at it.
Yeah.
And the paper one, when it comes in, you can sit down and.
Yeah.
It's on the kitchen counter, everybody looks at it, but I don't think on email you're gonna get much attention. But the other thing that came up was, and one of the topics that we could write about if it's gonna be in print, I don't wanna do it. But was this topic that came up at the dinner party was, hey, the town must be rolling in cash from Listener.
Right.
And some simple graphs, like you're talking about, some mathematics to show people that we
Not a
didn't
windfall.
triple our revenue by
Yeah.
what happened at Listener. So I'd be happy to write that if it's for the, if it's for the paper version.
Yeah, but
I was gonna read the electronic.
I apologize, but I believe, Steve, you said that the electronic version and the print version are exactly the same. It's just the medium of how they're.
yeah, they're the same.
They're
But
exact
the
same.
difference, I think what you're talking about is something being delivered at somebody's house
Yeah.
versus something somebody has to pick up.
So we're not gonna get any more in the house.
That's correct.
Then you know what? Let's not do it for the Township Newsletter. There's another newsletter that goes out. Like,
There's Newtown.
Sheila Turner, Hilliard.
Yeah.
We could put in, that's where the article should go. Because no one's gonna read the Township.
Well, I mean, we can throw it in, but so it doesn't hurt it. If we're gonna produce it, we can put it in as many communication vehicles as we can put it in.
That's
If it's
what-
all the same.
But it should, mainly be
Yeah,
for
but
that.
directed for that.
Yeah.
Exactly.
Yeah, I would think if something's longer, if you're doing, I think about the electronic one most likely being what you can read in about no more than a minute. because people won't read much more than that. If you're putting an article.
He's great.
That's an
He's
indictment.
giving it 60 seconds. I gave it 20. Steve, you're optimistic.
I am optimistic.
Township employee, he has to.
I have to hope that people have a attention
really
span
care.
of at least 60 seconds. But but obviously, you know, I mean, the Newtown Square magazine, just this last issue, did a whole article on the municipal authority and waste build out. And that was a good article, and I think that people, you know, appreciated that article.
It was enlightening.
It was, and so, you know, what we were hearing is people didn't know what was ours and what wasn't township wise, and people weren't necessarily reading the township news that came in. So we were looking for something that got news to people, one, more timely. One of the challenges we were having with that printed version is that we were having to have things in 6 weeks prior to it going into the mailboxes, and then it was 3 months worth of information that you had to have in. And that was really kind of hard to know exactly what we were getting in. So this, I can actually give something up until 2 days before. I mean, they like a week, but if I came in with something that came in as hot off the press, we need to get this out, I can literally do it 2 days before it goes out to publication. And so that's what one of the reasons why.
If you could get that kind of spread in every month, one of the comments I've heard about that monthly magazine, people go through it. The article, prior to your article, perhaps, the piece they liked the most in that magazine was Doug Hume's
Yeah.
Newtown
yeah.
history. So if there's another, I don't want to take away from the advertisers' good professional comment. If there's another piece of meat in there, the people would read it.
Yep.
Especially if every month there was, if you could get a 2-page spread in there, I think that'd be really to spread around the different township organizations. On your email, you know how many email addresses you have. You know how many are opened, how many are clicked on.
She does know that, the lady who does that for us.
That's a good.
I have not seen the latest report.
Because I get
We do
it,
that in
I open
business,
it, but my sense is people will get it, they might click on it, or they might not.
Yeah.
I mean, I think it's it doesn't cost that much, so.
Yeah.
Definitely do it. But if you really want them to read it, I think I agree with Alex. In that centerfold, yeah, you read it, because you're flipping through this magazine, oh, what is this?
The other page you look at is a page of home sales, I bet.
Yeah.
Yeah,
see,
you're exactly right. And so we want to put ours right next to that one.
Yeah.
Those are the ones, when it's laying around, people, look
And
at it.
that could be a win-win with the magazine.
Yeah.
Because he's looking for content that he wants them to open the magazine, so they look at the advertisements.
I'll
So
ask
I
Sheila.
think it's
She runs it.
and then, from our discussions today, the first thing, this list of capital projects, I think that's a great story.
Yes.
It is a great.
Hey, this year, we're gonna spend $3 million doing it. Now, people said, well, why are you fixing that roof? Why aren't you doing this? But hey, here's where your tax dollars are going. I think that's a great story.
All right, let's do this. Rather than making any motions at this point, the plan is that we are going to meet in
March.
March. Let's everybody come away from this with some thoughts. And then when we come to the meeting in March, we'll actually gather information from your various sources. And then we'll come up with, okay, this will be the plan of how we're going to manage this. And then we could decide on topics later. We'll worry about that. But just in terms of the mechanisms of what we're going to do. Good?
Good.
Yeah. That sounds good.
Yeah.
Great. Public comment, I see crickets. We are adjourned.